spent years planning to live with Alzheimer's disease. The GOP tax bill threatens those plans. When Diane Thorsen began to show signs of the Alzheimer's disease that had stolen her mother's mind at an early age, she and her husband, Richard Davis, were as ready as they could be. They sold their house in California to prepare for the cost of care and moved to Minnesota to live with one of Thorsen's daughters. Davis planned their finances methodically. Once Thorsen's long-term care insurance ran out, the daunting $99,000 bill for her nursing home would be manageable because they could deduct medical expenses from their tax bill. But as the Republican tax plan took shape, Davis felt as though the rug was being pulled out from under them. He plugged numbers into a spreadsheet as details of the plan emerged, finally arriving at the conclusion that after all his budgeting to avoid digging into savings, he'd need to withdraw about $24,000 next year. "I kind of had everything all planned out. I had it planned out to where I really wasn't spending any time worrying about the finances," Davis said. "It's kind of a kick in the stomach to have it all figured out and then to have it kind of all start falling apart." Share your story. Will the Republican tax plan help or hurt your family? In their plan to cut taxes and declutter the tax code, Republicans have proposed repealing all but a small handful of tax breaks. But people rely on those tax breaks and budgeting for medical expenses, adopting children, replacing stolen or disaster-damaged property, and even paying for business expenses. These credits and deductions don't feel like loopholes to the people who depend on them. Those tax breaks have shaped people's financial lives in fundamental ways, providing relief from taxes on spending that isn't optional. As soon as they talked about eliminating these deductions, that's when it caught my attention. "Oh, I'm in trouble now," Davis said. "It's going to throw out of whack all the projections I've made for what we'll have available in 2018. The Republican tax plan aims to do away with itemization for most people by doubling the standard deduction to $24,000 for a married couple filing jointly. The plan preserves some of the most popular deductions for mortgage interest, property taxes and charitable contributions, but it imposes some new limits. For new home loans, interest payments can only be deducted for the first $500,000, and only up to $10,000 in property taxes can be deducted. GOP tax plan would shrink mortgage interest benefit/corporate tax rate, but the medical expense deduction, taken on about 8.8 million tax returns in 2015, is one of the many being repealed. It isn't the most common tax break, in part because it requires a person's medical expenses to be greater than 10% of their adjusted gross income. But for those who do take it, the deduction can be crucial. The most obvious scenarios include an older person with a pension who would otherwise owe tax, or a family that pays to care for an older parent in a nursing home. But it isn't just older people, several tax specialists said. Eliminating the medical deduction could affect parents of children with special needs who might use the tax break to deduct expenses not covered by insurance. Working-age people with a serious illness such as cancer might also utilize it in the face of high out-of-pocket medical costs and earnings that are lower because they can't work. "I just don't see why these people should lose their deductions just like that," said Stephen Kronzek, a certified public accountant based in the district. "It's mostly elderly, it's not wealthy people, and there's no lobbyists running around to look out for these people." Republicans have argued that their proposed revisions would make the tax code simpler and result in savings for families. "Our bill lowers the tax rates and increases the standard deduction so people can immediately keep more of their paychecks instead of having to rely on a myriad of provisions that many will never use and others may use only once in their lifetime," said House Ways and Means Committee spokeswoman Lauren Aronson. "This tax relief will give families the flexibility to use their paychecks for what's most important to them, whether for home repairs, different medical expenses, or other unique expenses that come up at different stages of life." Tax preparers are still reviewing the bill to see whether it could have consequences for their clients. But Leon Lebrecht, chief executive of LJPR Financial Advisors in Michigan, said that given the current complicated system, simplifying the tax code might have a number of unintended consequences. What I call the slightly disingenuous version is that everyone gets a tax cut. It's way too complicated a system, Lebrecht said. He listed off people who might